Welcome to our next installment of our YouTube video series on business acquisitions. My name is Christopher Neufeld of Neufeld Legal, and I am a corporate commercial lawyer with a heavy focus on the acquisition and sale of businesses. In this particular YouTube video, we will be looking to discuss the importance of discerning the profitability of a particular business when you are looking to acquire it. Now, the reason we address this is because all too often, prospective business purchasers fail to adequately assess the value of the business, especially by failing to calculate in the impact of their acquisition cost. Because you got to remember, your acquisition cost represents what you are going to be paying down in the way of debt over a period of time. And with any debt, there's a carrying cost involved, such that the real debt amount is something more than the straight up number that you're seeing on your purchase price. As such, let us say you're buying a business for $1 million. In fact, if you're paying it down over the course of 10 years or 15 years, your actual carrying cost could be effectively transposed to say that you have a period of 10 to 15 years where you're going to be paying down $1.5 million. And over a 10-year period, that would effectively be that you've got a carrying cost that you got to pay down as against profitability of about $150,000 a year. And that works against your profit margin. And how do I say that? So when you start looking at the financials of that company and you're saying, okay, they built this company up from scratch. Now what is the profitability right now? And you have to determine, is this a business that has high growth expectations and that's why you're buying it? Or is it going to be somewhat more of a static, consistent, time over time? There's going to be eventual growth. There's abilities to increase, but it's only so far. With those types of businesses, you really have to pay attention to this aspect more so than others. These are really standalone business, whether it's a service business like an auto shop, an auto mechanic, a restaurant, a hotel, a retail outlet, a warehouse. There's only a limitation as to how much customer base that you're able to service and how much growth you're able to attain. Yes, you can significantly increase the growth, but that's a product on yourself. At the same time, you have to be realistic about things, because these somewhat, if I call them static, generally non-technology based businesses, non-exponential businesses that have broad reaches and broad customer bases, they need to be focused on the reality business that they are dealing with. And that's the present business. And then they can increase prices to a degree, and they can increase customer sales to a degree, but it's not the exponential growth that you have in some other types of businesses. So then you have to go and consider, let's see what we're dealing with. And what we're dealing with is now a couple things. Next, we have to consider is that even though we're able to achieve potentially increased revenue, and there thus would represent the potential for heightened profitability, there is a corresponding potential for increased costs. And increased costs is a near certainty. If you're leasing property, those lease rates will eventually go up. Landlords are always like that, and they go up often significantly. So you have to assess that. You should be assessing that early on in the due diligence process. Similarly, you have taxes, you have charges. Those are always going up. The cost of employees and contractors, they are constantly asking for increased pay. Minimum wages go up. Standard prices in the market go up. Insurance goes up. As you can see, a whole range of costs. Replacement equipment goes up in cost. New charges, new licenses, license fees go up. Everything is constantly going up. So you got to be matching that. And you can't be saying simply my revenue will go up and my costs won't be going up. If you're doing that, you're diluting yourself. Because unfortunately, your prices are incapable of going up as much as you would really like them in this kind of business. Typically, there's a natural consumer pushback against prices going up, whereas costs are typically going up irrespective. And the market on these bigger costs is such that they go up and they keep on pushing upwards. So you really need to be factoring that in. Now, you look at that, so you can't really commit to saying we're just going to achieve far greater profitability. And even though profitability right now might not be there, we're somehow going to turn it around and thereupon create the revenue numbers that we're looking for. That is being not simply optimistic, but somewhat delusional. Profitability needs to already be there. And when I say profitability needs to be there, you got to go dig deep into what the profitability numbers are. You got to assess how are they making this profitability appear this way? And what stories, if any, are they telling you as to why profitability is not what it is? Now, one of the things I like to say is I'm not really a fan of relying specifically on the final year of financials, especially interim financials. And why do I say that? Because in the last year, oftentimes people have been already structuring for a sale. So when you structure for a sale, you start to focus on creating profitability. Whereas in previous years, you were managing the business, and while managing the business, you're operating in the reality sphere. And because you're operating in the reality sphere, you're driven to sell the business, knowing full well that the business is not as profitable as you would like it to be. But to make it sold, you want to create the illusion or the appearance of higher profitability than it actually is. So what do? You sort of control costs, you don't charge costs, and you create a picture of a business that is doing, by appearance's sake, better than it actually is. So hence you have to look back at those previous years, and you have to look at them seriously. And you have to look at what's dissipating and what's changing, and not simply relying upon what the seller is telling you, but actually what the professionals can help you identify and what you can discern. And you have to dig deep into that, because you got to remember, you're buying a business potentially for $1 million, $2 million, even more, sometimes less. But irrespective, it represents a significant part of your personal savings, and that's you're putting on at stake. And it's not only the personal savings you have there, but if you're having financing, it represents a large financial commitment that you're making on this business. So you better be sure that it's going to be financially successful and it's already having a proven track record of profits. Otherwise, all that you are doing, in all honesty, is you're taking an unprofitable business off the hands of somebody else, making them rich, and you now have given up your money to service a debt that you're incapable of servicing, or that you could be working hard to service. Why are you doing that? Why? That is why you need to engage knowledgeable legal, tax, and accounting professionals, so you can approach this correctly, that you have the right system in place, that you work with people who can direct you in the right direction to assess the business. In my opinion, it's far better for you not to buy certain businesses, to spend the several $1,000s with the professionals and step away from it, than to do what all too many people have done in the past, which is buy businesses not realizing what they're fully getting into, and finding out that the business they have acquired is not the profit center they are. They have made somebody else rich, and meanwhile impoverished themselves, because now they have the burden of a debt for a business that is not even able to sustain the repayment of that debt, let alone having you work for years and years and years to simply pay down that debt and not make a cent of profit and make a cent of return, and you're losing money. That is not what you should be looking for yourself. That is not what you should be looking for your family, and that is a mistake you should not be making. Instead, you need to be engaging with appropriate professionals, and you have to be doing proper due diligence and scrutinizing stuff. You need to be pessimistic. You need to work with people who are somewhat pessimistic going into stuff, because that is the only way that you're going to be confidently moving forward. If you are assured and certain and confident and feel good about the profitability of the business, that's great. Go acquire the business. But if that's not the confidence you're exuding, and your professionals have not suggested that seems to be the case, they can't offer you assurances, but they can give you guidance, then why are you doing it? Why are you putting all this money at risk? Yes, as a lawyer, I don't mind closing every deal that comes my way. But do I want to close every deal simply because it's a deal to be closed? That is not what my objective is. At the end of the day, I'd rather have each and every one of my clients who do acquire a business acquire a profitable business. And those clients who have an opportunity to acquire a business and realize it's not profitable and that they're going to be servicing somebody else's debt and making them rich while themselves poor, that they walk away from it, that is my personal preference. I'd always like to see that before I see anything else, because it's about your success, your financial future, and your profitability with acquiring a specific business. I hope you have found this YouTube video informative. Should you need legal services with respect to business acquisitions, always I recommend knowledgeable, experienced legal counsel for that, myself or others. Always I welcome the opportunity to work with people and help them succeed in trying to give them the tools to discern whether or not this is the right business for them to acquire, and then proceeding to acquire that business, because that makes me feel good when you acquire a profitable business and you succeed, and not when years later somebody would come back to myself and say, I should have taken your advice and I didn't properly investigate this thing, and we simply moved forward with the acquisition, and unfortunately the business we acquired was not the business that we had hoped it would be. But so much of that falls upon you, but it also falls upon you to get the right people to work with you, even though the decision is ultimately yours and yours alone. I look forward to seeing you in future YouTube videos, and hopefully, like this video, we can provide you with more important insights and information that will help you in advancing your own business acquisition pursuits and your overall business development and business expansion. Thank you.